G'day guys, it's Jake here. Nothing in this video is financial advice. Please use your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So today's video, we are talking about the stock market, okay? So that includes the Russell, the Nasdaq, and the S&P500. Okay, so the indices, not individual stocks. We're not doing Mag 7 stocks. We're not doing medical stocks or, AI stocks or any of that sort of stuff. We're doing just indices because that is a good basis for everything else in the market. It's a good, basically it's a basket of stocks making up these indices. So you track them more than the individual stocks. I'm not a stock channel, so I'm more of a crypto channel, and I just like the indices because, over the long run, indices outperform, if you, because individual stocks come and go. Businesses can go bankrupt and they can drop a lot on their own, whereas this reduces your volatility, but gives you exposure to a lot of different companies in the US. So anyway, around on there, get the idea. So that's the reason why I just cover the indices, because it's easier, to give a broader perspective of the US business stock market. So I just want to go on a tweet that I made on my Twitter page. So if you haven't followed me already, I'm not verified yet, but I was verified and I unverified. Go and give us a follow, all right? @Jake_Perenni, and that's that's my profile. So give us a follow; that'd be much appreciated. Anyway, so I'll go to that post. This one here, the Russell 2000, and this one basically says, for the Russell 2000, I'm expecting correction for the bull market support band. So it's got every single asset, you overlay the bull market support band, and it's just a moving average of the 20-week EMA and 21-week SMA, or other way around, 21-week EMA or 20-week SMA. I've got that in the right order. Anyway, I'm expecting it to go down there in early November. After that, it should break all-time highs and head to its final peak of the business cycle. And Bitcoin should go parabolic once it makes new highs from the Russell. Okay, so if we click into here, have a look at the historical, what it's done previously. And if you go to 2007, the financial crisis, the GFC, the 2009 low. Okay, so that was the high made here. It didn't really break that high. We tried here in 2011 and we failed. And then tried again in 2012, failed. And then eventually late in that year, we got this push here again to the highs. It's this one of the highs. This is just important to note. So it goes up to the highs after the third tap. This one didn't quite get there. Corrected down to, as you can see, the bull market support band is the green and the red. The pink is a 50-week moving average, but went below it. So anyway, just demonstrating that it's gone down there and didn't spend much time, and then boom, onto new all-time highs and its price discovery. And Bitcoin in red there is the Bitcoin top for that cycle, November 25th, 2013. And this one kept going, okay, even after Bitcoin topped. But the point I'm trying to make is, in early November, this line was drawn in 26th of November, but if you go back a couple of candles, it's on the weekly time frame, this is early November, okay? So we get that correction here and then boom. So that's the first one. It happened again. So we had a high here in 2015, I think it is, yeah. Went down into 2016 and we attempted it, and then we smashed big candle here, like nearly smashed through, and then we had a confirmed push here. Before this happened, right here, we corrected. So from basically early October, mid-October, so mid-October I think it was, mid-October here, all the way down to the 50-week and the bull market support band, okay, in early November, and then went higher. So get back to 2012, it was the same thing. It was around, this is a bit earlier, this top, okay, and it was bleeding a bit longer. This top was a bit later, and it didn't last long. Capitulated down, then boom, and off into the sunset in the Valhalla. And then Bitcoin obviously topped here in December 2017, all right, and it kept going a bit further. So it's the same thing, corrected November, and that was it. Then the bull market, the real bull market, the alt season, for crypto, and then stock market did really well. And then this is 2020. So we had a high back in 2018, had that correction in the end of the year, pretty bad correction for the stock markets and that. And that's, it struggled, went sideways and went back up to it in 2019, late in that year, and then early 2020, and then boom, we had the pandemic, unfortunately. So he couldn't break these highs. We pushed back higher, and we've got this correction, this orange circle. Make it easy for you. It's the orange circle there. And early November, as you can see here, the weekly is right at the end. This candle here was right at the end of October, early November, roughly, and then boom, there we go. There's your massive business, toward the end of the business cycle. And look at that, just absolutely went bananas. Look at how far extended away it got from the bull market support band. We got that correction in November, all right, and went higher into Bitcoin's top. And they top at the same time, that cycle. Now, we are at the highs. We've run the highs from 2021 to 2024. We failed, and then we've made new all-time highs, but we haven't broken up durably, okay? It's like a false break, And I would expect it to come down and then go higher. So in early November, as previous times showed, and then boom, off into, the Valhalla sunrise, altcoin mania phase, banana zone, what do you want to call it, for alt season, and the crypto market is going to be more exciting than the stock market. But the stock market was still good too. Of course, the AI stocks, tech stocks, what do you want to do? They all perform well, every single one of them, in my opinion, because it's just the big guys do well, and this is the small guys, 2,000, will join the party, okay? And then, you can see that should play out there. So that's the tweet I did. And here's a chart I want to reference here from the Tradinghurst on Twitter. He's a good guy to follow, David F. Tradinghurst. This is his chart, so it's not my work, it's someone else's work. And this is just going back on the 40-week cycle for the stock market. Which one? This one. This is the SPY, the Triple Q, and the IWM. So the S&P500, the Nasdaq, and the Russell, and then the FTSE, which is the British stock market, and the GDAXI. Don't know what that one is. Anyway, so it moves in rhythms, yeah. And I don't want to go and sort of bore you too much with this, but so the highs are all sort of topped here with this cycle, 19th of May 2015. They all went down with this sort of cycle, bottomed in July 2015. They found a low here. They rallied up into November 2015, and then they went down again. And this is a bit late, this one. The lows are a bit back here, but this was a bit later in March 2016. Then it rallied up to July 2016. Some corrected, some went sort of sideways, and then went to this low here in November, went back up, down, they went down, this went up. You get the idea, There's highs, there's the highs in August 2018, down in December 2018, up, down, up in December 2019, and then boom, there was a big pandemic sell-off. It bottomed in late April, so a month after the actual low of the stock markets. And then, you ride it up. There's a slight high here before a pullback. So high in August 2020. This bottomed here, obviously a bit later than this one. And then went higher into May 2021, pulled back. They all went sideways, really. And then the high here, January 2022, which is roughly where the high was for stock markets, a bit later, like a month later. And then boom. Then we had that sort of inflationary downward midterm year, which is pretty bad. And they bottom there in May 2022. They had a high in October, which was actually a bottom for the stock markets there. So it was a bit off here. Went down into February 23. They went up, which went up here. In July, down into November, which is what happened. And up into March, and then corrected into August 2024. Yes. Up in December 2024, yes, roughly around there is when the stock market peaked. And then that downward tariff sell-off, which was here, 2025 April, and then boom, August 31st. And now we're sort of getting a bit of a pullback, and then will it come back down? I don't know, it could trade sideways, it could do a number of things. It could be wrong as well. So, yeah, I'm just showing you the ebbs and flows of the stock market and the 40-week cycle. So that's that one. But yeah, if this curves roll down and into January, the next move up will be into the peak of May. And I do see, this is not a predictions video, but I do see the stock markets for the business cycle peaking out around that time, about mid-May, which lines up around with this cycles analysis tool, so maybe a bottom in January, maybe a bottom a bit later, a bit sooner. This will just chop up and down, and there'll be pullbacks along the way until we get to this peak in May. All right, now on to the fear and greed index. So the fear and greed for these S&P500, and we're at 31 fear, okay? And we can see that, a month ago, 54, a week ago, we were 50, and the previous close on the Friday, or Monday, I should say, it's Tuesday now, is 33. So we've actually gone lower, fearful, and go on the timeline now. And here we go. So this was the correction to April, okay? And then obviously we had a peak here in July 2025 for the fear and greed. They've got really greedy and making lower highs ever since. Well, the stock market's been going higher. As you can see here on this chart, it's been going higher. We've sort of topped out, October 9th. We've had this pullback here down, and then so getting this pullback, and then we will continue downward. We don't know yet, but I am predicting that we do go down into late October, early November, as I've showed you on my Twitter post on the Russell. As I showed you here, I do expect this for all the stock market indices, not just Russell, but also the S&P and Nasdaq. All right, they are pretty correlated, but sometimes they're not. But towards the end of the business cycle, they all pretty well correlated. Anyway, back to this one, and we have been going down, and lower highs and lower lows. So, as you can see here, and we are down at 30, yeah, 30. And this has been climbing high, as you can see, the stock market. We started these lower highs in May, and ever since May, back to, where's May? Here. Look at that, just riding the wall of worry while this has been going down, but it's started great, extreme greedy up here too, don't get me wrong. But yeah, it's been going down ever since July, and we're in sort of fear territory. I don't think you can zoom out on this chart. I don't think you can. Fortunately not. So you got breadth and all other stuff too. But yeah, if I could zoom out, it'd be better, but I don't think I can zoom out on this one, because this sort of gives you a good context of when you get extremely fearful, that's a good time to buy. All right, so we're not quite extremely fearful, we're just in the fear territory. So we can see more fear coming into this market, hopefully, and get down to the extreme fear box. On to the next one. So this is the S&P 500 specifically for the year-to-date ROI based on all post-election years, okay, every single post-election year, going back to, I think, what's this say here? 1928 or 1920s basically, and then all the way to now. So it's a nice bit of data set there, 100 years or so of data, which is nice, beautiful. And we can track from what happens in post-election years, okay, and see what the price action does in those years. And it's a good summary. So what we'll do is we'll have a look, okay? And this is a good projection of what can happen coming up into November, what I expect to pull back. So you get sort of, this is hard to read, but start of the year, into March, you get a pullback here, then we get a high, and then another low in April, and then coming out of this, so you get this low in April and March, which is what we got this year. You got an April low and a high toward, basically January, February, and then boom. So we got that high, we got this low in March and April, and they've been going up ever since, which is fine. And where are we in this cycle? This is a hard one to read because I'm not attuned to the data set here, because it's in not months, it's in days. So you get to basically 175, 180 is roughly halfway through this. So we've got June, and then into August, July, August sort of thing. We top, and then we go down into late October, early November, basically, which is around here. Okay, so we get this correction, which is what we're expecting, and then towards the end of that year. Okay, so going into the end of that year, you got that like right towards December. All right, so this sort of October time frame, November. So I'm expecting this seasonality to play out as well as what I've showed you on Twitter. And that will play out, and then we should get a high. It'll be higher than this probably. We'll probably finish the year higher, or it'll take until 2026 to make new highs again. So we don't know yet what's going to play out exactly. This is going to happen like this. Then we probably won't get a high that's higher than that. Yeah, but we're sort of topping out now. We've been going higher. All right. So if I just overlay this year's data set. So you can sort of see what the average compared to 2025, okay? And we've got this low in April. We're growing, we're in October now, right? So this was going down, right? This peaked out a lot sooner. This is like July, August sort of time frame. July, I believe. Anyway, this was going down, down, and down. This is being up and up and up. So we have this is October here, right? So November's around here, and then December here. So really, we're on track to get to this. We can sort of cool off now and light more of the averages and then continue higher. That's what I expect. So that's that one. And here's another sort of seasonality chart that I've pulled up. Go back to 2020. Okay, so it's just every year, or 2017, sorry. I changed it to 2017. And what you can see is where we are now, all right. In whereabouts are we? So 2025, right in the blue. We're here. So this blue, dark blue sort of thing. This dot here is where we are currently. And all these ones sort of correct, most of them do, into 29th of October. So basically late October, early November. So you can see they pull back here. So you got 2020, 2023 in orange. You got that sort of blue colour 2017, in the green in 2024. The top one was 2021, but that just kept going higher. But you can see there's a low formed here, and even the bottom one in 2022, there was a sort of a low before we went higher. Okay, so I do see this sort of catching up and playing out as well. So another seasonality one for you. And on to the indices now. On the indices, so we're starting with the futures though. We'll go with the futures. We're sort of getting some live price action now and a bit of volatility for these things. It's 0.75 down before the session has started, so not good at all. 3-hour time frame. Go over the daily, and you can see we had this low, we had this gap between this candle and this candle, and we're sort of dropping now. So probably fill this gap at least at 65, 600, and then back down the bull market support band. So I want to see this retrace this level. Okay, as I've showed you on the Russell, I want to see it happen for all the old indices, not just the Russell. So every single indice will get this pullback, and that's what I want to see. And this is showing downward momentum on the MACD on the daily time frame. Back to the 3-day, and I'll show the MACD again. And we're seeing this sort of divergence play out. So price is going higher. All right, use the command button, and then this is going down, and this is crossing bearish. I should see a nice pullback here. This will go down, and then we want to see it pull back to this, all right, sometime soon into late October, early November timeframe, and then boom, go higher. So we can chop a bit and then go down. Don't have to play out straight away. This sort of pullback here, it's not going to be very much. It's not a huge move. It's only 4%, 3.5%. By the time it catches up, 3.5% for the S&P 500. So that's that one. The Nasdaq, it's the same thing. It's divergence playing out. Okay, divergence, and then you can see it here. All right, it's playing out exactly the same. It's very similar, and the pullback will probably be more for the Nasdaq. It's a bit more. It's 5.5%. So it's 3.5%. A bit more volatile, that one. And the Russell. And this one's not diverging, actually making high highs on the MACD, and this is making high highs, so it's not diverging. But the other two are, and it's 2 against 1. So we should get a pullback to the bull market support bands, and that'll be a roughly 6% move. If it catches up, 6%. Yeah. All right, so nothing to really fearful. And if we do go towards the 50-week, it's like some other times that has happened, like I showed you on the Twitter, it could be more like a 9%, 8% pullback. It's a bit deeper, but I don't see too much of a pullback. Nice 6% healthy correction before, for sunset and Valhalla, as I mentioned before. The good times, and I want to see all that sort of craziness going on towards the end of this business cycle, and the small stocks will end up doing really well. So that's that one. And yeah, we're getting the sort of bearish cross now on the MACD, and the RSI is getting a bit heated here, so we can get a bit more of a correction according to those indicators, those ones. And I can show you the Russell chart too, just to show you in live real time what it looks like with those sort of breakout periods. Yeah, like I showed you on the Twitter charts, this is sort of a live view of it. And yeah, there it is there. And that was your MACD cross on the 3-day time frame. So we're on the 3-day time frame. There's your MACD cross there. That was a confirmation to go higher. And there's your GFC high. There's your 2011 high. And then, we got this pullback here in mid-November, okay? So it took a bit longer, mid-November. And then, boom, we shot higher. We broke through this line of resistance. It even goes back to GFC. And then, boom, that was it. That was Bitcoin's top there, all right? Next one, same thing. And there you go. There's your MACD cross. There's your pullback to the past bull market support band. And the 50-week was here. This is a secondary support level. So had secondary support like it did here, but it did break through the 50-week on 2012. God, I'm not very... Yeah, my speech is there. I do start over now and again, so please forgive me. So how it is. So the pullback was November the 1st, and then we sort of got going in early November. So there's your early November pullback, and then you can see how it went parabolic, it went really good. Bitcoin obviously went even more crazily on that run. It was a massive move of Bitcoin. But the Russell, had to do well for Bitcoin to do well. They had to break through these highs and had to break this resistance level for it to go higher. And same as this one. To break through this to get it to do well. And this same thing happens. You got your two highs, 1, 2, 2019, 2020, and breaks through nice and strong. There's your MACD cross. Here's your late October, so October 30th, early November, and then boom. Break through. Okay, so there's your pullback to the bull market support band. All right, as I've demonstrated. I'm just repeating things. I know I'm repeating things, but just want to get you to drill it in your head. There it is there. Pullback, down, and then we're trying again. This is going to be the third attempt and break through eventually. This is obviously not the futures. You get the point. And then we should get this down to here, this golden box. Right, and then a continuation to the upside. I don't see this being over just yet, and I just want this to be done in early November sort of time frame. Whatever it is, and then boom. But the thing I did show you with the trading hearse, going back to that one, it was there was a low in early January. So this is a 40-week, bigger cycle. But yeah, it could sort of like do this sort of thing and break through the highs, right? Something like, earlier than that, maybe November, get to December, and then get another pullback into January and then go higher, or it could just ignore it, and just keep going higher and just grinding into May, which is, I think, the top's going to be in May 2026. All right, so there's the analysis for the stock markets. I think that's pretty much it. Thank you. So I hope you enjoyed this video, just going over the Russell, the Nasdaq, and the S&P 500. And yeah, looking at my tweet I made about the Russell, talking about all the previous times, every sort of 2012 period, 2016, 2020, so every 4 years, and then we're in 2025, so 5 years later, we're getting this sort of 4-year cycle for crypto, lining up with the Russell breaking through the previous highs. So it all lines up pretty well. So the stocks are going to do well for the crypto market to do well, because without companies and without businesses, you can't run an economy. You can't have nothing. Goods and services have to run somehow. So these stocks have to do well for the crypto market to do well, because stocks have earnings and crypto doesn't have earnings. Sorry to say that, but that's the truth. Anyway, and that's just what else, you know, to make sure everything lines up, and we're getting there. We're so close. We're so close to breaking in, you know, for the Russell typically making new all-time highs, but the S&P and the Nasdaq obviously are at all-time highs and pulling back now, but they have those resistance level for them. But the small stocks having a resistance level, which makes it, you know, very, very interesting to see where this all plays out. Because I'm expecting a pullback to the bull market support band for all three indices into early November, roughly, and then from there go, you know, higher and higher and higher into the business cycle peak, which will probably be in mid-May-ish time frame, somewhere around there, May to June maybe. Not a particular date, but somewhere around mid-May, I reckon it's going to be the stock market top. But crypto, I don't know the crypto. Probably most likely tops earlier than that. Probably Q1 into early Q2. But yeah, I do think it's going to be extended, this crypto cycle, because of the business cycle. You know, you need businesses to do well, like I said. and there's other data you can look at too, like the ISM manufacturing index is another one to look at, and we're not above 50 yet. And once that breaks above 50 durably and stays up there and goes higher, even in the 60s, then we're on, mate. We're on. So we're sort of held down by that. And that's every cycle we look at. If you study it, you need that ISM manufacturing index to go above 50 and stay out there durably. So that's that one. And then we looked at, you know, historical, you know, post-election years, see where we're at with that, and the pullback lines up with that as well for the S&P500, which, you know, indexes will follow as well, and crypto will follow that because, you know, it is what it is. They're pretty correlated. And yeah, you know, look at the 40-week cycles, okay, to see that, yeah, the top sort of August time frame, mid-August to January, going down to January. So we'll see what happens there. I don't know. Goes into January, but that's sometimes it's not perfect. So that cycle, it moves rhythmically, so it could have a low in January as well, and then going into May. May. Yeah, so a 5-month rally after that. So we'll see if that lines up or not. If it's February and then goes to May, 3-month rally, it's going to be high highs and high lows. So that's the way I look at that one. And, you know, that's how it goes. So that's what I'm expecting. And I look at seasonalities for 2017 to now as well, and they also line up as well. So I'm just looking at sort of now towards to the end of the year. I'm not looking at 2026, but yeah. But you've got to just look ahead sometimes, make an analysis, so everything runs smoothly, and you got your plans, your strategies, and you can make your own decisions that way. Because we all get carried away with emotions and the dramas. And I made a video, you know, the other day, which was a crazy sell-off in crypto and that, and it was off a tweet, literally, and you know, anything can happen. So just don't get feared and manipulated out of this market. Stay in it until, you know, your strategies and indicators flashing. But I'll keep you all updated on what I see, and it's my opinion. It's not financial advice. You can do your own research on that matter. So that is the video, and if you liked it, please smash the like, comment your thoughts below. God, I hate when it does that. Subscribe to stay updated. Be sure to check out the links below, and I'll catch you in the next one. Cheers.